Imagine staying at the absolute top of the stock market for like 35 years. Only 7 companies have actually pulled that off in India. Welcome to today's daily audio briefing of the Curated News, curated by Sandeep Ohri.
Yeah, we're basically running through 11 essential updates, sequentially, just to get you fully prepped for the day ahead, skipping the fluff, sticking to the facts.
Exactly. And starting with global geopolitics, the Business Standard is reporting that President Trump declared a weekend pause in attacks, but, well, Iran completely denied that any agreement was reached.
Which is, it's like a broken traffic light at a busy intersection where everyone thinks they have the right of way and nobody's actually moving.
Yeah, nobody's going anywhere. And Sandeep notes the sheer frustration of this war entering its 5th month, saying, quote, "Stop," or I'll say stop again.
Seriously, that gridlock is just very real. And well, speaking of being stuck, let's look at the judiciary. The Times of India is reporting over 10,000 Supreme Court cases have been pending for more than 10 years.
10 years. Wow.
Yeah, and it gets worse. It's even heavier in the high courts, like over 1.6 million or 16.14 lakh cases.
Wait, 1.6 million?
Yeah, and 80,000 of those have been waiting for over 30 years. So Sandeep's advice here is pretty blunt. He says, think twice before getting into any litigation.
I mean, I would definitely think twice after hearing that. Moving to the markets, the Business Standard highlights that since 1991, only 7 companies have remained in India's benchmark index, the Sensex 30.
Right. That's Tata Steel, Reliance, Tata Motors, Hindustan Unilever, ITC, L&T, and Mahindra.
Yeah, so I have to ask you, and I guess everyone listening, does this show incredible resilience by these giants, or does it highlight a worrying lack of new market disruptors over the last, 35 years?
I mean, that is the crucial question, right? It shows how hard it is to maintain scale over decades, but markets do evolve. Like ET Wealth just highlighted the Social Stock Exchange, or SSC.
Wait, how does a stock exchange work if you aren't making a profit? I mean, that's the whole point, right?
Well, that's the twist. The investor is actually a donor. So nonprofits register to raise funds here, and instead of financial dividends, you get audited social impact.
Oh, interesting.
Yeah, it regulates and tracks philanthropy just like corporate investments.
That makes total sense. Now, looking at foreign capital, the Business Standard notes India approved just a single Chinese foreign direct investment proposal in FY26. That was worth about 10 million rupees, or 1 crore.
Right.
But they approved 13 from Hong Kong, worth 610 crore.
Yeah, the mechanism there is strict government scrutiny. Direct proposals from bordering countries face massive compliance hurdles, so the capital flow heavily favors hubs like Hong Kong.
Got it.
Meanwhile, domestic industrial engines are just running hot. The Financial Express reports July power consumption rose 11% year over year to nearly 171 billion units.
Wow. And peak demand hit 270.2 gigawatts, barely missing May's all-time record.
Exactly. But, while power is hot, tech funding is freezing. Yeah, the Financial Express notes that in late July 2026, tech funding dropped to just $246 million across 30 rounds. That is a massive 65% drop from the previous fortnight, and it's down 53% year over year.
That is huge. Why the sudden crash?
Well, investors have completely shifted their metrics. They are no longer funding growth at all costs like they used to. They're demanding immediate profitability, which means far fewer deals are closing.
Right. Which brings us to traditional investments. ET Wealth compiled 3-year returns on mutual funds, showing leading schemes hitting anywhere from 12.9% to nearly 25.6%.
Which sounds great, but Sandeep wisely cautions us here. He says, always speak to your financial advisor before acting on media reports.
Hold on. If returns are hitting 25.6%, why should you be cautious?
Because, well, trailing returns look backward. A sector that surged for 3 years might be massively overvalued today. You don't want to buy at the peak just based on yesterday's news.
Okay, yeah, that's a really good point. Shifting gears to sports, the Glasgow Commonwealth Games 2026 final tally is in. Australia took first, England second, and Canada third.
Yeah, and India put on a great show, finishing 4th with 39 medals. That's 13 gold, 17 silver, and 9 bronze.
Awesome. And in infrastructure, the Financial Express published this really stunning photo of a Vande Bharat train crossing the 359-meter high Chenab Railway Bridge in Jammu and Kashmir.
Oh, yeah, I saw that. It's an absolute engineering marvel.
And wrapping it up for another Monday morning is this piece. Potholes continue to exist in roads across Mumbai. That's from the Times of India. And Sandeep jokes it's really no surprise we can send up a moon mission because the craters right here are great training grounds. He even points out a piece in Midday about how his own right to information request actually removed the Ohri colony road toll. Plus, Sandeep adds that despite all those foreign learning trips taken by Mumbai's BMC city officials, they still don't know how to make good roads. Have a fab day, folks. We'll see you tomorrow morning.